As a trader, one of our major challenge is the decision of either to buy, to sell, or to stay out of the market. Many often we are good in making analysis in determining the direction of the price, but it is often challenging for us to find entries, and because so many times trade have gone against us hitting our stop loss, it makes us become scared in making entry. So in this video, we'll be solving one of your major problem in trading. I want to say thank you to everyone who have subscribed to this channel. Thank you for the show of love. I want to know that I appreciate you, and it is because of you that this channel is still active. Share the videos with your friends and loved ones. Now in this video, we are looking at Forex tricks for trading using our commodity channel index. Here is the indicator setup. All you need to do, make a screenshot. We have our moving average, the period is 10, shift is 0, method is exponential. Make a screenshot of it. The second is moving average, the period is 20, and then the shift is 0, the method is exponential. Then we have our window indicator, we have our relative strength index, the period is 9. As you can see here, the pixel color, mine is white because my background is white, so you can change yours either to black depending on your background color. And here we have our commodity channel index, the period is 14, just as it is. Take a screenshot and go ahead and save it on your chart. So now here, this is our chart. I'll be explaining to you how I make this entry and how you can repeat the same pattern in making your own personal entry. Price on your H1 is an uptrend. Price is giving us a higher high, higher low, and a higher high. Now look at this scenario. This is what happened here. In our previous video, we've talked about divergence, and here we have divergence. So now I'll spot my divergence, and this divergence is playing out. So now, how do I make my entry? I'll simply make my entry this way. When I'm moving average first, I will want price to close below my moving average. This is a reversal trade because you can see that price has been bullish for a period of days. So it means that we're taking a reversal, which is to sell on H1. So price pull back, closes below our moving averages. So you need to be patient and wait for price to go back inside the moving averages again. You can see this, price pull back again inside the moving average, and then you want to see these rejections. You can see these rejections. This bar closes inside your moving average. This now validates the reversal, and as at when this is happening, you now need to pay a keen attention to your commodity channel index. Your commodity channel index is around this level of 80. You can see it. It's around this level of 80. Then you can now make your entry. Alright. So if you look at it now, immediately the commodity channel hit a level of 10 and 20. A spike happened, price pullback. So please do not underestimate the power of the commodity channel index when it comes to the level of this zone. So it is advisable first, when commodity channel index is around 50 zone, do not take a trade. Allow it to break either to the upside or the downside. And if you are to take a continuation pattern, Now price has been bearish. For a buy trade to occur, we have a divergence. Anytime price has moved in a particular direction for a long time, it begins a reversal, giving you a divergence. Here again, we have a divergence. And having established this particular divergence, this is how price move. You will notice that price closes above our moving average. Can you see this? Then price went to the upside, and then price pulled back here. And then look at our commodity channel index. Look at the level here. And then look at this candlestick formation. You will always need a candlestick formation to trigger your entry. So we have that pin bar. So this particular pin bar closes above the moving average. So that becomes your valid entry. And remember that your commodity channel index has pulled back to 50 zone here. It means it's a pullback. Alright, it's a pullback for a continuation. So you will buy from here until you get to 80 and 90. Once you get to that zone, you take your profit. And if you are selling, once it gets to around the zone of 50, you exit it. This is a continuation. Can you see this? The price pulled back to this zone. When it pulled back to this zone here, look at our commodity channel index. Our commodity channel index is coming from the downside of the level of 20. So that is a double confirmation for us. This pullback now validates the end of the retracement. So price closes above our moving average, we'll now make an entry. Remember we said if it is a sell reversal, look at in this scenario, this thing is here. For this is a buy, this is not a sell. Now because this thing is here for instance, and this one is here, which means here, okay, this is here and here. You can see this. You don't have a sell trade in this case. Why do I say you don't have a sell trade? Because for you to have a sell trade, look at what should happen. Even though this is here, price closes below your moving average, which is true. You want to see a pullback again, back inside your moving average. And look at where, at this bottom here, this low here, this low, look at where your commodity channel index is. It's already at the level of 20. So there is no room for you to sell. So you need to be patient. If I thought this should be a sell, it will now pull back inside this moving average, give you a bearish candlestick pattern, either bearish engulfing or a bearish pin bar. Then you will now sell to the downside. But to prove to you that this is a buy, you notice that all the candlestick formation that were formed here are all pin bar, and as such this is a buy continuation pattern. Okay, please endeavor to watch this video more than once so you can understand what I am explaining. So that is for that. Now here we have our step index. Now look at this scenario. From our step index on this H1, I am spotting something like a divergence playing out already. We are great. Okay, so having spotted this, how do I make my entry? I will want to see price now close. I want to see this price close below my moving average. look at where this thing is. Before this price will close this moving average now, it means that my commodity channel index has already pulled down here. Then I want the price now to pull back again. Commodity channel index will now pull back up and then give me a bearish candlestick pattern formation that will make me to come down, and then by then I'll be coming from this zone. So this is how simple the pattern works. And immediately I begin to come down from that zone. Now I would see this. This is what I want to see. Then price pull back like this, and I will now see this coming down. And once I spot this, I can easily place my trend line this way. So you can see I place my trend line and it will look the price already is giving me a high, a low, a lower high, and a lower low. So this is how simple this works. I want you to back test it on your previous chart. And then there is a question about in the comment section about step index. In the subsequent video, I'll be doing depth analysis on step index and how you can find entry. I believe you have learned something new. Please do not forget to share the video, give it a like, subscribe, turn on your notification bell so you'll be the first to get notified when I upload the next video. And if there is any video you want us to talk about, just as I've said about the person who asked about the step index, drop it in the comment section. I'll be doing justice to that. See you in our subsequent video.